What up, guys? It's Sundays. Markets are closed. It's January 29th, and we're prepping for this coming earnings week. That's week 3 of Q4 2022 earnings season. So we're looking for some companies, some economic data that's coming out. We have companies in our portfolio that will start to report. It just keeps getting crazier and crazier every week as far as companies reporting and what we're looking for on these earnings. Okay, if you guys have any questions, please let me know how I can be helpful. Let's get started. So here we go. We'll start with the economic calendar for this week. And this is brought to you by Econo Day. The Econo Day is my favorite kind of, calendar type of setup for the economic calendar, what comes up later. And it shows you all the consensus and the market's or the market's expectations and what the prior numbers were. So you know sort of what the market is expecting. So when these numbers come around and your portfolio gets dinged or goes higher, you have some idea as to why that happened. Okay, and we'll start with Monday. Okay, and Monday, there's not much going on Monday. We have the manufacturing survey, but I don't pay too much attention to that. Then we go to Tuesday, the 31st, and we have consumer confidence, which is expected to go higher. As inflation goes down, this number is expected to go higher. 2/3 of the U.S. economy is a consumer-based sort of economy, right? So we have we have to pay attention to this, right, guys? This is an extremely important moving forward as far as consumer confidence. It's going to be imperative that we watch this number. Now, on Wednesday, things heat up with mortgage applications and ADP employment report. So with mortgage applications, I care about mortgage applications because I care a lot about the housing market. Our exposure to the housing market is through Rocket Mortgage. So, of course, Rocket mortgage applications go hand in hand. So we want to see that number tick a little bit higher as mortgage rates have actually come down. So hopefully that comes up and we see some good numbers from our Rocket Mortgage ticker. All right. Now, ADP employment. We're looking at the U.S. economy the prior month creating 235,000 jobs in the month of December. The consensus for now for January is 158,000 jobs created. That's a significant decrease. That's what we want to see. We want to see a number just slightly weaker than 158. Remember in a prior video how we talked about the Federal Reserve and what they want to see in these numbers. We don't want these numbers to fall off a cliff. We want them weak, but not too weak. So we want to see somewhere in the range of 150 to maybe 155 would be an ideal number for ADP employment report. Just coming a little bit weaker than expected, so the Fed doesn't get all up on arms about it. All right, now JOLTS report. Okay, this is essentially the job openings and labor turnover survey. That's what it stands for. JOLT report. It's expecting 10.2 million available jobs in the economy out there. Prior to that, 10.4 million. Hopefully this comes in lower. We want to see a lower number than 10 million. I'd love to see anywhere between 9.8, hopefully even lower as far as job openings out there. It shows that the job market is contracting, so the Fed doesn't get all up in arms about it. Okay, we want to see that number go down as well. Then we have the FOMC on Wednesday. That's the last event for the day. That is big, guys. This is the big dog event for the day. This will move the market. The expectation is that FOMC, the Fed, is going to increase rates by 0.25%, 0.25. Excuse my handwriting. 25%. That looks like a 1, but that's a 2. So if it goes any higher than that, prepare for stocks to be demolished. Okay. So what's going to happen here is that the announcement of the rate hike, hopefully it's what the market expects, 0.25. That's already priced into the markets. The markets feel comfortable with a 0.25% point interest rate increase. If that doesn't happen and we get a half, prepare for stocks to get demolished. That signals to the markets, or a 50-point basis hike rate increase would signal to the market that the Fed is ready to throw us into recession and try to get that inflation under control no matter the cost. Before it's, hey, we're not going to purposely throw the economy into recession. We're definitely not going to do it on purpose. But if we have to, we will. So hopefully that language doesn't come out. And then during the press conference, I really wish that these press conferences, they didn't have them. I mean, the questions they ask sometimes, these reporters are silly, one-sided, and geared to kind of get the answer that they want to get. So I wish this never happened, but it does. We'll deal with it. Definitely something we need to watch. Okay, if you're not watching this, you don't care about your portfolio, plain and simple. All right, now, motor vehicle sales on Thursday, okay? We care about that because we own Ford stock. We want to see what these sales numbers look like, and then jobless claims for February 2nd. Consensus, 193,000 jobless claims. The prior was 186. So market is expecting more unemployed than usual. We want this number to be higher, and that's how the market would react positively. The market would react positively to a higher jobless claims number. Not too high, but just slightly higher, somewhere in the range of 195 to 199, I would say. That would be the range in which we would want to see that jobless claim number, and then nothing else as far as economic data, all right? Now let's move on to the actual earnings calendar for next week. Quite crowded, as you guys can see, and it'll get worse and worse throughout the weeks. Hey, if you guys are still around, please hit that like button, hit subscribe. Thank you for helping me out. Definitely appreciate that you guys support me on these videos. Hopefully you're learning something from this stuff, and we have some fun in the meantime, all right? So on Monday, we got SoFi, and SoFi is a little bit of a retail name. If you guys have been in the market for a while, you know that there's a lot of retail money in SoFi. And we just want to see what it does after earnings. If it's reporting strong earnings, it should have some strong numbers as far as higher interest rates for savings accounts. But these guys pay out a lot of money in their savings accounts, so who knows, right? Now, for the rest of the day, nothing else until we get to NXP after the close, all right? And here's what I noticed about NXP. It's been a long time since they've reported after the close. So I'm hoping that this is something that they're letting us know as far as good numbers that are coming out, because reporting after the close is usually more hype, kind of more hype oriented than before the open. More kind of serious companies that want to be sort of under the radar do before the open, and then when you want to be kind of in the limelight, you report after the close. So NXP, for the first time in a bit, they're reporting after the close. And of course, we already know from Texas Instruments, who reported last week, that everything is weak in semiconductors except automotive, which is the bread and butter of NXP Semiconductor, right? We'll move on to Tuesday, and we'll be loosely watching UPS, by the way. Yellow, loosely watching. Red, definitely watching and going over the conference call and the earnings report. So loosely watching UPS for the state of the economy. UPS is shipping. We want to know how that's going. FedEx, UPS, we'll definitely watch that and see what news comes out of that. I suspect that shipping is going to be strong, but maybe not as strong as prior years, and the year-over-year comparison will be pretty interesting to see there for UPS. And then, of course, GM is one that we're definitely going to watch because we have Ford reporting on Thursday. So GM is going to give us a little bit of an insight as to what they're going through at the moment. I'm anxious to hear from GM and Ford about their response to Tesla's price decrease. If you guys saw, I did a video, was it last week or the week before, on Tesla versus Ford, in which I kind of talked about the cost to benefit of the models and how expensive Tesla were. They were in comparison to the value proposition from the Mach-E and the F-150 Lightning. That has obviously changed in the weeks after. So I'm anxious to hear what these guys have to say as far as their battle against Tesla. I'm sure that we'll get some stronger language from Ford, as Ford holds the number 2 EV maker position in the market. Okay, so nothing else before the open. And for our portfolio, we got AMD reporting after the close on Tuesday. We've seen not as bad as feared numbers from sort of like a Texas Instruments, but this is gaming and data center, which should have some strength still. So I'll be anxious to hear what we have to say. I'm expecting sort of a flat to lower end quarter, but also a not as bad as feared quarter from AMD. And the stock has been demolished lately in the last year or so. So a lot of bad things could already be priced into AMD and could be set to soar after not as bad as feared earnings. So nothing else there for Tuesday. And then Wednesday before the open, nothing interesting there. Maybe waste management would be one that I could kind of loosely follow. We'll put that in yellow, but loosely follow waste management. That's sort of like construction building and waste management. They talk about construction business here and the waste from construction. That'll be interesting to hear what they have to say there. And then, of course, after the close, Meta. We own this in our 401k, not in our big dog portfolio, but in our 401k. So I'll definitely be watching Meta and what they have to say. We definitely want Mark Zuckerberg talking more about Reels, about Instagram, about WhatsApp, rather than the metaverse. The metaverse is not profitable. It's not this big thing, what they made it to be a year ago or year and a half ago when Snoop Dogg was buying like millions of dollars in the metaverse, real estate in the metaverse. That's no longer the hype anymore. That's just not the business anymore. Also, what TikTok is doing and whether they're actually taking market share from TikTok, that'll be interesting to see there. Okay, nothing else here until we get to Elf Beauty. And I haven't talked about this company much before, but I think it's important because our position in the Honest company sort of, I feel, has the same customer base as an Elf Beauty would. Of course, this is beauty products, makeup, and sort of like our beauty products from Honest company, but that extends into sort of skincare, which Elf Beauty, I'm not sure that they have a lot of skincare on their lines, but you have the same kind of shopper there, the Target shopper. So this will give us a good idea as to what Target and the sales at Target for Elf Beauty are. If they report strong sales, I suspect that Honest is also going to report strong sales there. Okay, so nothing else there. And then Thursday, nothing before the open, after the close. Craziness. This is where the craziness is, right here after the close, with Amazon, Apple, Alphabet, Ford, Qualcomm, and Starbucks. All major movers. Of course, we start with these three here: Amazon, Apple, and Alphabet. Amazon and Alphabet, I loosely watch. I don't get too much into their earnings reports. I kind of watch the news about it because they move markets, right? If they do well, they move the Nasdaq higher and the S&P higher, of course. Apple, I do listen to that conference call because it is such a market mover. The Dow, the Nasdaq, the S&P all move on Apple, being a $1 trillion plus, almost $2 trillion company. I think it's a $2 trillion company at this point. If it gets dinged severely, it moves the entire market with it. So definitely we want Apple to report strong earnings. I suspect they won't be strong, but we'll see. And then, of course, Ford portfolio. Like I said, we're looking for Jim Farley to comment and sort of give us a view as to how they are going to combat or how they expect to deal with the Tesla price decreases that happened recently. And then Qualcomm, chip maker, of course, we own this one in our 401k, and Starbucks. I just sort of like watch Starbucks. Starbucks is a very expensive stock, very, very expensive. I just sort of just watch it just to see what it is, kind of health of the economy, health of the consumer kind of stock, right? There's a lot of things that people will give up before they give up their coffee. But once people start giving up their coffee, watch out. That's like recession talk all the way. And then nothing Friday after the close that I'm interested in. And that's our prep for this week. Now, of course, it's a short video, but I definitely appreciate you sticking by. Let me know if I can be helpful for to you in any way in your investing journey, whatever you want to call it. Hit me up on Twitter, on Instagram. That's how I keep up with the news and how I help you keep up with the news of the market. And let me know how I can be helpful to you again. Thank you so much. Peace out.